Welcome to The Nest Show, the podcast that brings you insights into the crypto market, trading and investment experiences, and what we're looking forward to as we navigate this space together. Today, we're joined by CryptoBirb and our special guest, trader Smokey. Smokey is known for his clean charts and his blend of Ichimoku and price action trading analysis. Smokey shares with us his journey as a young trader getting into crypto and how he went about refining his personal trading strategy. Later on, I roped Smokey and Adrian into each giving a technical breakdown of the Bitcoin charts in their own styles and counterpoints. This ended up being a seminar in charting and trading philosophy from two of the greats in this episode of The Nest Show. Once again, thank you for joining us, and we hope you enjoy the ride. What The Nest Show is. This is a podcast brought to you by the Birb Nest community, an independent crypto and forex-centered trading community built to sharpen each other in capturing opportunities in the markets while protecting capital along the way. What this is not, trading advice. We are not financial advisors, and you should not regard any information here or in the Nest Club as financial advice. You should always consult a licensed financial advisor before making any financial decisions. We are joined today by Smokey. Smokey, gentlemen, sir, how are you doing?
I'm fine. Thanks for having me.
Awesome, man. Thank you so much for being here. And also we have Adrian, the Birb himself, the Birb Nest. Adrian, what's up?
Yeah. Hi, it's also great to have me on this on our own podcast.
Oh, that is so generous of you to have yourself, sir.
I'm very happy to be here, but I'm more happy to host actually for our special guest to be Smokey, and we've been friends for a longer time already, and I'm super impressed with his all the efforts and all the content quality that he's producing. So I'm definitely happy to and looking forward to discuss it all.
I know Smokey's blowing up on the Twitter. My mom keeps telling me I got to get on the Twitter, and Smokey's got to figure it out. Smokey, you know what they say? Where there's smoke, there's fire. And sir, your charting is just that. It's fire. You've been in crypto now since what, 2017?
Yeah, early 2017, I bought my first Bitcoin.
I think you and I might have gotten into it about the same time. What was it about, like 3,000 or 2,500 or something?
No, it was right at $1,000.
Well, you think you're better than me?
Yes, but no, it was...
Well, you're about $1,500 better than me, that's true.
Yeah, but it was all just luck. Like, a friend of me told me about it, and he kept hassling about it was the future of money. And
it's a good friend.
Yeah, but at the beginning I was pretty skeptic. But then he made some money with it, and I was like, I want to make money too. So
you're one of those, huh?
Yeah. Like it started like that. I just wanted to make money. And then I got into it, and it kind of just kept going. So yeah, here I am. Living through a bull market, living through a bear market, and whatever the fuck we're in right now. So
well, the point is you live through it, and you come out on the other side, and regardless of what kind of shape that you're in, if you have a little, a few war injuries or whatever, you have the experience, and that makes you better equipped to handle it on the next go round. But I wanted to ask a little bit about your trading style. And I know that you said that you've kind of been focusing on other elements lately, but, in preparation for this, I was looking a little bit over the Ichimoku trading guide that you published and some of your price action stuff. And I was really happy to find that, unlike a lot of the kind of trading philosophy that we've reported on this podcast, where it's more mathematic and algorithmically driven, where the emotions are out of it. You presented somewhat of a counterpoint, which relies more on gut, more on intuition, and more on a flexible set of rules. Can you elucidate to our listeners kind of your process in arriving at your own kind of personal trading style and how you kind of zeroed in your own practice?
Since I started in 2017, I wasn't really getting into TA that early. And when I then first started looking at TradingView and actually trying to learn how to do technical analysis, I started off with trend lines because that was the big thing back in 2017. I had no idea about horizontals. I just knew that Ichimoku existed. I was really like a novice. I had no idea. As time passed by, I wanted to get better, and I realized that like trading solely off of trend lines won't bring me to the level I want to be, at least not for myself, because I wasn't that good at utilizing trend lines alone. And then I just kept on looking at other Twitter people. Like I never joined a paid group myself. I never bought a trading course myself. Like everything I did is just piecing the puzzle together, from taking from people like Trader SC, taking from people like Josh, who introduced me to Ichimoku. And then slowly but surely, my own trading style came together. And it ended up being price action and Ichimoku combination. And I've been using it for like over a year and a half, I think, by now. And I've stuck to it, and I have decent results with it. I just feel familiar with the charts right now. Like when I look at a chart, I know exactly what I want to see, what I'm looking for. And I think that's important, an important first step as a trader, to just find something that he can familiarize himself with and then work to get better from that standpoint.
Absolutely, man. It's a very subtle but awesome process of when that sense of familiarity sinks in. You know, when you find the chart speaking to you in a way, it's like picking up another language. You know, where all of a sudden, you know, when you're walking through a market or whatever, you can actually interpret what a passing by conversation holds. I think that, you know, it's a very subtle process, which makes it difficult to, you know, to translate to listeners or otherwise. But, you know, it just takes work. It takes a lot of time, and it takes you putting in the work to figure out what works for you and what doesn't resonate with you, and really arrive at it in your own journey. Adrian, I'd love to hear your journey on the same thing of how you arrived at your own personal trading style and the false starts along the way, if you don't mind weighing in on that.
That's a good question. And actually, that's funny because there was always like early 2017 when I got to actively trade Bitcoin, right? Because for my own background, which I am the chemical technology engineer, I while studying at Polytechnics in Warsaw, Poland, I had like many friends who were like IT specialists, programmers, and all that. They were into Bitcoin. Okay, they were like these geeks, this type of geeks guys, and I can remember talking to them like the most, I believe, in 2013 or 14. It was one of the hot topics for Bitcoin itself, right? If you recall back, especially with the with the Mt. Gox exchange just hacked, and collapsed and all that initiated the bear market of 2014, and it was a hot topic back then. I was like mainly focused on my studies the other day, so I was listening only to them, but I was passive. It was not really until 2017, I believe it was April. So I'm still worse than you, Smokey, with regard to the buying Bitcoin price, for sure, for lower price. But I think it was 1,800 that we got to see, or somewhere around 2K that we got to see, I believe, in May, June 2017, if I recall back well. But since then, since the actual start, it obviously takes a lot of time to find its own way with all this madness, right? And especially now that Bitcoins, I believe it's been through a lot with regard to not only the halving happening for the third time. Since then, I think like this entire community around it just changed so much, right? And why am I saying that? This is extremely important for the community around the Bitcoin itself. Crypto Twitter didn't used to look like this, that it is looking the way right now. And it was much more, I would say, at least to the best of my memory, friendly focused. There were many really like not many big accounts, but there were like I recall, there was like Secrets of Crypto that he like returned right now. There was obviously Not So Fast. There was obviously Pato. Many of the guys that could go on and on. With regard to the community around it, I think what the community consists of. I mean, the average age of traders, of people like getting the interest of a Bitcoin. Well, this is what makes and actually drives the price, at least partially, right? Because back in 2017, there was not much, interest, I believe, from large investors, from actual like hedge funds in Bitcoin, because it was only this entire rally from end of 2017 all the way up to 20K that kind of like showed to the world that Bitcoin, like, first of all exists, that it was one of the best performing assets, if not the best performing asset in financial history, right? And since then, I truly think that that was the moment that Bitcoin and altcoins just kind of like truly were born. And it means that entire 2017 and all the years later, they were completely different with regard to trading style, right? Because you could buy altcoins, in the greatest boom in 2017 at the end, and still make money, like whatever you would buy, just the way it was with the dot-com bubble in 2000s, right? And all of a sudden, when the bar market kicked in, you had to kind of like schedule and then find your own new way. Because it's not a no-brainer anymore to buy altcoins, right? Right? You could just lose a lot of money on that, and that was the time. 2018 was my definite time for active searching and push, also for Ichimoku, which was one of my main initial, let's say, techniques and systems that I used. I still use that under the form of, the Birb indicator, right? This indicator that I use and apply to every chart of mine, on, like, be it on Twitter, on Discord, or whatever. There is this histogram. If you go and look at any chart I post, there is this histogram in the Birb indicator, and it represents Tenkan and Kijun, form, not directly Tenkan and Kijun, which are, one of the, let's say, basic elements for Ichimoku. They are hidden in the kind of like a momentum form in the histogram. So I still use it, right? This old style of Ichimoku, I still use it, but more in a momentum relation. So I definitely trade mid-time frame swings right now, while participating in the long-term run. Out of all the holdings, like 60-70% of my holdings are for spot long term, okay, which I base on MA200, simple MA200, which represents the actual growth, and definite steady growth for long term for Bitcoin. And I trade only, just with the remaining part, with the remaining Bitcoin holdings on, on futures, on for to hedge with shorts or whatever. And so it's a mix between Ichimoku, obviously price action, and the momentum itself. That's my style right now, and I find it very attractive to me.
Yeah, I see your charts a lot on Twitter, and I really like also how you introduce patterns into the chart. Patterns like wedges and ranges, but then potentially they turn into bull flags and stuff like that. It's pretty nice. Like, one of the best trades I took the last 2 months was based off a broadening wedge. It's like I have no clue why that worked out so well. Like, I longed 6,900 when everyone said it's gonna dump, and I had a target of 8,400, and it just went straight to my target. No clue why that worked.
Well, that's actually interesting. That's actually interesting. Why would you say? I'm actually curious to hear that from you, if you don't mind. Like, what would you say? What would you think makes patterns work?
I mean, the psychology behind it, of course, but sometimes it's weird because you see the pattern and you see the price action that forms the pattern, but then you see then you look at Twitter, or you look at TradingView, or you look at YouTube, and you see the sentiment that people have. Like, so you have the technicals versus the sentiment that you actually see represented by the social media. And there's such a huge discrepancy sometimes. It's really weird, in my opinion, that you can see a bullish formation on the charts and definite bearish momentum on the social medias. It's pretty weird.
I'll tell you what, since we're already discussing the Bitcoin and charting so much, why don't we just go ahead and jump on into it? Smokey, I see you have pulled open the BTC weekly chart there. Why don't you tell us a little bit about what you're seeing?
Okay, so right now I'm on Bybit. I just wanted to mark the weekly keygen because that's a level I always find very interesting. Let me see, I'm gonna swap to BLX right now. Let me remove those drawings. As you can see, just like historically, the keygen has been a very interesting level on the weekly time frame. Look at 2015 to 2017, like every major drop ended at the weekly keygen, and it just kept going. Like, look how precise it has been. And here, like when we drop below, pump back up, turn into resistance, like this whole bear market, you could have caught that with one single short on the keygen. So for me, that's a very interesting level. And when I look at, right here, the fib retracement, down here, let's turn off log. You can see it's right at the 50% point because like that's what the keygen is of the last 26 weeks. And I already shared this on Twitter. Like my big picture view is either we break this high at 10,500 or we go to 7,200 again. Because like this is right now the big range we're in, between 3,900 and 10,500. And when you take a look at this here, we have these equal highs here. Like, okay, Bybit took them out, I think, and on BLX you can see this too, but other exchanges didn't. It was very, very close. In my opinion, this is an attractive target for longs. And if this level is broken and flipped, I don't see us having much resistance before going to all-time high. Like, of course, there's this weekly level around 11,700, 11,500 to 11,700. But other than that, like, I don't think this will pose much of a resistance, these levels here that we saw in 2017. Like, this was such a crazy time. I'm not sure how reliable those levels are, except for the yearly open here, which got tagged already last year. So like it's 10,500, 1,400, and then 20k all-time high, in my opinion. That's what the weekly tells me. Other than that, to the downside, 7,200 yearly open. It's pretty weird how all these levels like kind of interact with each other. Like the keygen right now being right at the yearly open. And yeah, I mean, it's a fascinating view right now because we saw this huge doji, which usually is a reversal pattern on the weekly, but we just filled the CME gap. And if this weekly continues like this, I see us going to 10,500 and higher. That's just, the bullish momentum is definitely there for it. Like if a candle like this doesn't stop bullish momentum, then what will?
Well, I love, and I think that our listeners will agree that I just love the simplicity of the chart. You know, you have your keygen there, and you have some fib levels, and then you have resistance, and that's about it. Would you say that you most actively trade the weekly to take your long positions, you know, or do you often use the weekly to then discern on a more finite basis, like to see the daily or 4 hour, etc.?
Like I mark out weekly levels to give myself boundaries to trade within. I don't like taking trades solely based off the weekly because then I would take trades every year because price moves relatively slow on the weekly, but that doesn't mean that those levels aren't interesting for a trader on lower time frames. Like the interactions price has with these levels is still gonna give you a nice idea of where price could be heading. So I have those levels marked, and then like here on BLX I can only go down to the daily. But wait a second, I don't have many levels marked right now. But for example, let's see this level here. In my opinion, a very interesting level because like it was the low here that brought this up move, and then it turned into resistance before like for this accumulation range we had here before another up move. So let's take a look at the daily because it's a weekly level. Like you can see, you have resistance here, resistance here, resistance here. You have support here. You couldn't see this on the weekly chart. Like this SR flip, you didn't see it on the weekly because like the time frame is just too high. But you see a nice SR flip here. You see here price again running into support, down, again resistance. Like you see these levels are important on lower time frames too. So I think the weekly just gives a nice, like a nice playing field to mark out important levels, and then just trade the time frame you're within, but keep these levels in mind because like they exist and price is most likely going to react to them.
I love it. Adrian, did you have any response to that chart before we get into your view?
Well, I personally, you know, as I said, I'm a big fan of Ichimoku myself, and I still use it, right, despite in the not cleanest form. Are you using the regular ones, right? You're using the 30, 60, 30, right?
I use 9, 26, 52, 26. Like the regular ones, standard ones.
For the traditional ones. Yeah, that's fine. That's fine. And, you know, I personally, well, Ichimoku itself, like by the definition, right, it means at the first glance. And that was the very initial, I believe, very initial concept and an idea behind like applying the Ichimoku. So instead of having like tens of charts open, or I should say like drawn on the paper, right? Because it was many years, decades, centuries ago when this, you know, technique, Japanese technique, kind of like came to the use. And yes, this entire idea of Ichimoku was to kind of like replace tens of charts, right? Tens of indicators, tens of drawings on the patterns into one chart, right? With Chikou span, with Senkou span A, B, right? With Tenkan and Kijun, I believe this is a perfect case to have it all as you Ben referred to that. I believe especially for Kijun and for Tenkan, these are very clean pictures, right? And they're having also lots of in common with regard to the mathematical formulas and how you actually just come up with them to calculate them, right? Because they work as averages, they work as momentum in a way, but more like a averaged momentum, right? Measuring the actual average between the high and the low for a given session, for a given actually just period taken, but and taking the average price for that. But all in all, with regard to the weekly chart, I believe this is the cleanest chart that we can come up with right now. I can actually just open the chart right away. Yeah, so there is also the BLX open, right? And this is beautiful with regard to to how in general I use BLX, okay, because it delivers the entire history since the first Bitcoin listings in July 2010, right? So any other exchange will not get you that, I believe. So this is the recorded price history for Bitcoin since the very early origins, and that's the reason for using the BNC, right? For me, BLX. What I mean and what I referred to, like at the very beginning, I believe, right? MA200, the black one, right? It's so beautifully, it's obviously the logarithmic chart, but it doesn't matter because it's still growing, right? It's been growing forever, since forever. And so the actual average, right? 200-week average, right now equals like what, $6,000 or so. It's not a spot price for Bitcoin, right? It's like a liquidity intensive price. But the most important part is that it just keeps growing, right? So I can guarantee the majority of day traders, especially those unskilled ones, just living over the dream that they would just skip their job or drop their 9 to 5 and be, day traders, and everything's going to be all right? They have no boss on, just standing above their shoulders and all that. But it's it rarely ever works this way, right? Because when you are a day trader, you need to make decisions much faster, much more frequently than if you're a long-term trader. And this means that simply the more you trade, the more you lose. Number-wise, I'm not talking about the ratio, wins to rewards. Wins to losses, right? Win to loss, like ratios and strike rates and all that. But I refer to that as the actual number. The more you trade, the more you lose, right? And for that reason, it's definitely much more important to respect the risk management, right? Because you lose more, so we need to respect that more. To preserve your capital. But having said all that, these people, they would most often do better by just holding Bitcoin, right? While knowing the upward direction for the long term, then they trading all the way down to zero DRK, right? So yeah, day trading, this is extremely, I would say, sophisticated way of going over to, to their financial freedom. It's definitely possible, but well, you need to be skilled and experienced in many also technical indicators, I think, to be able to realize your strategies well. And well, knowing that this strategy, well, if you wanted to play moving averages themselves, then the direction is clear, right? No matter how we look at it, there's a beautiful combination of, MA200. Oh shit, MA200 over here. What's going on? MA200, this one, MA50, this orange one, right? And well, I'm not sure if somebody will, if all the listeners just recall that, but I was one of the very few guys that were talking about this entire move as a deviation from long-term trend, right? I would never say and call Bitcoin dead at this point. No fucking way I would do this, right? And the reason was because MA200, it keeps growing, right? It keeps growing. So this tiny move, well, tiny, it was actually one of the largest dumps in Bitcoin history, but this move was just a deviation, and the actual, well, wick, the actual lower shadow of this candle, right, from 3850 or all the way up to 33s, right, 3300s or so, this was like a large long-term demand, and those who bought here were extremely lucky, right? And extremely lucky, or should I say either experienced or just wise when it comes to investments. And because knowing that not only we bounced off this deviation like extremely fast, right, recovered way more than actually the drop itself, we are right now on the testing way to, well, to test the highs at the like all over again, 10.5 K, right? And well, I completely agree with Smokey on that. I believe well, we are on our way to all-time highs, and well, taking out these highs to make a new high and reclaim this level, right? Now it's just well, like a mid-stop behind. We're actually on the way to break also these highs of 14K, right? And when we break these highs and reclaim them, then all-time high is just next, right? And well, similar story, if we break all-time high and reclaim this shit, then well, God knows where it stops, right? I personally have my own targets around like 40,000, right? But this is only derived from technical analysis, okay? The real, well, case, and I would say very often misconception, misinterpretation, comes from assuming that technical analysis would impact the same, let's say, way the long-term charts and the short-term charts, right? But the truth is that technical analysis is a way to, well, to optimize your short-term charts and short-term trading, right? Because the long-term trends, for example, just like this one of MA200, they are, well, they come and they are formed because of the fundamental values of a given market of an asset, right? And this alone means that, it's more about how much people would be willing to pay for this, magical internet money, right? More than just what I put in the chart and say that this is an important level. But if I was technically just watching the chart, then 40,000, I think it's definitely on the table. If you, well, it's also not to just believe, but, well, purely relying on technical analysis like principles that the history repeats itself, right? Or at least rhymes. And then you notice that we had, like, what we're seeing right now is like the fourth bull market for Bitcoin, okay? The fourth cycle. We've seen the actual first, after the listings, the first listing is in July 2010. We've seen the first crash of Bitcoin, okay, over here, which was the actual very first trough, the very first bottom. The next, well, we marked out the entire rally for the first time ever to $32, okay, to establish $32, well, high, then dumped 95% or 94 all the way back to 1.98. Then we marked our V-shaped reversal with another second bottom over here. towards new highs of 1250, okay, and then next dump towards 150, okay, backs over here, and to mark out the third bottom for the market. Then, well, we obviously did the go for 20k, and retraced all the way back more than 80% on average if you look at it in the history for Bitcoin. Then this 3120, right? And see, I don't consider these recent moves, I mean this one and this one, these are not like bull or bear markets for me. This is a bull market and this is a bear market, right? This is a bull market and this is a bear market. So the time, okay, the length of the cycle is actually what I'm definitely paying much attention to. And for this reason alone, I would not dare to call this a bull market, okay, and this one a bear market, but I would more refer to that as a semi-bull market at least, right, at best, or semi-bear market. But it's definitely not the same range or context like the way this was. So all in all, right, we know that every peak has its bottom and every bottom has its peak, right? And we've had so far, if you look at it, right, after every bottom, right, the fourth bottom over here, well, as I said, every bottom has its own breakout of the accumulation, right? There's obviously some shorter or longer accumulation on the bottoms, the breakout, well, and the throwback towards the, well, somewhere pre-breakout levels, right? The levels from the pre-breakout of their accumulation. So accounting this as a deviation of a long-term trend, and knowing that we've seen 1, 2, 3, 4, right? Or like if we count it this way, like whatever, just to make it more, let's say, adjusted to the picture itself. We've seen 4 bottoms, but actually, 3 peaks, to be honest, right? Because this is, well, the moment we're starting, the 3 peaks over here. And knowing that every peak has been all-time high so far, especially after every halving, right? And we've just passed through the halving, and every low is a higher low in history, right? Historically, then there is no reason for us, based on technical analysis, why not to expect all-time high, right? And add on top of that the momentum. If you add on top the momentum, right, then you can clearly, well, just notice that this, let me actually just clear the chart to make it more pleasant to watch. This move from 10.5, okay, that ended up with this large deviation. We are in definitely different context. The trend was exhausted, right? That trend was exhausted. There was a bullish divergence, obviously, on price over here, right? This was like a good, 60% ROI rally, then a dump, obviously, and it ended up forming a massive, even way like a combo bullish divergence. Okay, like a double, triple bullish divergence. No matter how we call that, it's like a combo. Okay, and on top of that, we are almost. First of all, we retraced the entire dump. Okay, the entire dump from what was to be the Bitcoin's death. So the sentiment kind of like flipped. Okay, because it's not dead. It actually just retraced higher than it was before it was to be dead, right? On top of that, we are somewhere around retesting the highs of 10.5s, right? We tapped 10K, and we are nowhere near down on momentum, right? We are not even in the overbought area. The actual trend is like extremely strong, because if you look at it, right? If you look at it, then there's clear space to grow to the upside. There's clear room, and the stochastic ribbon. Okay, because the Birb indicator consists of the stochastic ribbon and the TK histogram, okay, the TK from Tenkan Kijun. And this is a trend strength indicator. It shows you the trend strength. And first of all, we have these MAs laid on top the MA shadows laid on top of the stochastic, or just lagging behind the stochastic. So it works as an additional filter for the breakout, right? So from the moment of the breakout above the MA shadows for the stochastic, we kind of like officially confirmed that, well, it's up to do some good stuff, right? And then on top of that, you have the alignment between the momentum of stochastic, which is the actual price action, and the histogram from TK, Ichimoku derived momentum. And when there is a directional, alignment, both go to the upside, right? Both advance, and it's nowhere near done, just for the sake of how it performs on the momentum, then it makes me we are easily just going to break it, right? Whether we are going to retest, for example, like MA 100 first, which is like this intermediate level between MA 50 and MA 200, well, that's another story, right? But for me, I believe if we close, the moment we close the weekly candle above this one, right, then we are kind of like, well, on a good way to sooner or later break it to the upside and reach out to new highs. But if you get a buying opportunity around 67 to 7,700, well, I would be a buyer. I would call myself lucky if I get this.
It's actually a level I'm also looking at on the 7,200 roughly, because of course it's only a target I want to see if we don't break 10,500, because if we break 10,500, the weekly Kijun will start trending upwards too, because we made a new 26-week high. And then I don't want to see a retrace to the yearly open. For now, it's still in play, in my opinion. It can happen. But once 10,500 is broken, and if there's no huge rejection, I think bears are done, and Bitcoin is it's never going back down. Not to 7K and those levels. The show is over once those highs are taken, in my opinion.
Yeah, I mean, it's actually true. I mean, as I said, there are no technical reasons for me not to believe we're not going all-time high, right? We're not to believe we're going all-time high. But all I mean is, well, no matter how we look at it, well, the chart is bullish, right? We're just kind of the moment we as I said, reclaim these levels, right? Oh, the moment we reclaim these levels, these tiny like a supply over here, right? Represented by, for example, this high wave spinning top, okay? If you look at it, then there were many candles like that, and they were I would say fake bearish signals on the exponential rally, okay? And just like you referred, I believe, to this one, right? If I'm not mistaken, there was this, what it looked like extremely dangerous and bearish doji, okay, long high wave doji. Well, it resulted in a big sell-off, okay, with a shaven top candle, which was typically bearish. But the response from that, Jesus, I mean, they just blew off, the entire bears, I believe, made them underwater. And these looking candles, these angry looking candles, they don't really always work as so bearish, right? So I would not, well, especially if we close somewhere around the highs, right? Now, it's going to be a very bullish candle, I think, for the weekly. Short-term demand filled very quickly also by the lower shadows. And only a matter of time until we reclaim, until we break out to make a new high, reclaim the level, right? And continue upwards towards, well, I believe these 14K. So I think we're kind of in a good alignment when it comes to expectations, May, right?
Yeah, I think so too. I'm not overly bearish. I don't have much bearish sentiment in myself for Bitcoin anyway, because I'm a long-term bull. There's no reason not to be a long-term bull when it comes to Bitcoin, in my opinion. And as you explained with the 200 MA weekly, the trend is your friend and the trend is up. On the long-term view, the trend is up. There's no denying it. I don't see a reason to be a long-term bear on Bitcoin, especially not when you see so much on-chain activity happening, and we have the halving right now, and institutions coming in, and I have no clue how you could be a long-term bear on Bitcoin. It doesn't make sense to me.
Yeah, unless you were left with no position, right? Then you just dream of buying Bitcoin.
Yeah, but like that's when you become insane and start talking about tether and like of course I could be wrong and Bitcoin could start dumping. I don't know, but like I don't see an immediate reason to be a bear on Bitcoin. And right now, the lowest level I could see it go for retracement is 7,200. And that's where I want to see a bullish reaction if we get there. Because like that's the 100 MA weekly, I think you said. And it's also the weekly Kijin, which is an extremely strong level. It's the yearly open. Like there's so much confidence for support around there. And like when I see people now already talking about Bitcoin going sub 2K, what are you smoking? Like,
Well, there is
seriously.
Smokey, right?
Yeah, but like they are smoking some stronger stuff than I am because it's always nice to speculate, but when you're so sure,
You got to use your imagination, Smokey. It could happen.
I lived through the 2018 bear market and I don't even have that imagination. Bitcoin must have hurt them somewhere.
Yeah, for real. Yeah, post-traumatic stress disorder. Well, guys, this has been an impromptu masterclass in charting for our listeners and viewers. Yeah, but Smokey, in respect of your time, I want to go ahead and wrap things up for you. As I am keen to do, I like to leave our guests an opportunity to provide listeners with final thoughts or anything that you'd like to leave them thinking about. Smokey, what do you have for our listeners in terms of final thoughts or ideas that you want them to leave with?
Okay, like leave your emotions out of trading. Obviously, that's why I actually took a break from trading now this week because like I just realized that my emotions took over, and it's never a good thing to become too attached to the asset you're trading. That's one thing. That's a big thing in my opinion. I hope this whole Corona shit is over soon because we could all use a breather, in my opinion. And yeah, just stay safe, trade well, and wishing you all the best.
For real, man. And what you said there in terms of taking a break and not letting your emotions get the best of you, like our listeners are keen to remember that this is a marathon, not a race, and that you have to maintain sustainable levels of output, with your own inventory of energy and attention. And Smokey, you're very well on your way to doing big things in this space because you learned that lesson early, and it's an important one. What about you, Adrian? What kind of final thoughts do you have for our listeners, and what do you want to leave them thinking about before the next show?
First of all, I do suggest you open your Twitter account and go and put a follow on Smokey's profile. You don't want to miss out his content, definitely, that I can tell, and I personally approve it all the way. With regard to the more trading related, let's say, practices, there is like ongoing stereotype that if you're not a day trader, you should not dare to call yourself a trader, right? Which makes completely no fucking sense to me. And in fact, if you think about it, like all the best investors, like, for example, Warren Buffett, right? Can you imagine them trading, like day trading, some shitcoins or some penny stocks over, in the basement on the 100x leverage, on some exchange, right? Just being glued in front of their monitors and computers, just watching 1 minute candles, right? It's not happening, guys. And actually, as I said, the more you trade, the more you lose, and there's no way you can actually just limit that, right? And so for this reason, day trading is not the only way you can go about it, right? You can go and trade low time frame swings, short term like movements, right? Daily fluctuations, tertiary trends. You can go or peak to trade like mid time frame swings, or should I say, or refer to that as secondary trends, right? Or if you're a position trader, you can go and choose position trading. And actually, as I said, knowing that the uptrend, it just exists for Bitcoin. It just keeps going since forever. So most of the day traders, especially when they are not experienced, when they believe and live off their, imagination and their stereotype, that some people just simply don't know that there are other ways of trading than day trading, right? So day trading is not the only answer. It's not the obvious answer, and it's actually one of the hardest answers to how we can perform long term, and because it does require your entire lifestyle, right? It's not just a trading itself, but it means if you're doing that professionally, it means most often you don't really have your other occupation, your other profession. You just master the candles, you just master the charts, master this actual, let's say, surrounding around you, right? And everything involved in trading. My suggestion is do your own research with regard to who you want to be or what style of trading you want to perform, what strategy you want to perform. Because day trading is not the only option, right? And so do always first, especially with lower money, with lower funds, with lower portfolio, start with investing in yourself, in your knowledge. Because this is the only thing you can do with smaller portfolios. And then applying this knowledge that you got, by purchasing, like $30 book, then you can apply that to make millions.
Well done, Adrian. Well, guys, once again, I want to thank you so much for both being so giving of your time and energy and experience on today's show. I'd like to thank our listeners for joining this episode of The Nest Show. We invite you to connect with our guest on Twitter, where Adrian can be reached at CryptoBirb. I am at BenjaminT1717, and Smokey is at Trader Smokey. Additionally, be sure to check out his YouTube page at the same Trader Smokey handle. If you've appreciated the depth and breadth of what you've heard with us today, subscribe to our podcast and find our landing page at thebirbnest.com. We have a vibrant Discord community which acts as our central hub of operations, and we welcome you to join us at thebirbnest.com/Discord. We also offer an extensive free bulletin on emerging crypto market trends, exclusive undervalued gem reports, and in-depth expert technical and fundamental analysis at thebirbnest.com/bulletin. We always appreciate engagement from our community, which of course means liking the video and subscribing to our page, where we insist on bringing you the highest quality content available. Also, we're happy to incorporate tips and topics from our listeners and encourage you to email us at thenestshow@thebirbnest.com. This podcast is brought to you by the Birb Nest. Thank you, and trade on.